I mean, the real question is liquidity and cash flow. So, of course, we understand some of the concerns that some of the Democrats may have about where the money goes. I mean, no one wants to see stimulus money becoming a share buyback in about 3 or 4 months' time. But ultimately, these corporates need to be kept alive because these are the corporates that generate the revenues to provide the salaries for all the employees. And the employees may be able to give them $1,500 or so, but that money will run out unless the corporates come back to life and are able to pay wages. So, I mean, I can see the I can see the issues on both sides, frankly. But this is why, ultimately, I know that a deal will be done. I mean, we saw this back in 2008 with TARP, didn't we, in Congress? A deal will be done because no one is going to let major employers go down.
Does it worry you that they're pushing back and taking too much time to do this? Because this is clearly they're playing politics with not just the American voter. They're playing politics with jobs.
They are, but this is par for the course with Congress, isn't it? Well, you see this with the debt ceiling issues. As I said, we saw it with TARP. I mean, the market had to collapse before Congress was actually willing to pass I think it was $750 billion then. So it's just to be expected. And actually, I think the markets are reasonably sanguine about what Congress is doing. Yes, I know the Dow closed yesterday, and of course it closed down yesterday, but the Fed have come out and said they're unlimited backstop. But honestly, I think most market observers do expect Congress to pass something because most market observers have seen this before.
What do you think the hit will be to the US economy? How significant do you expect that hit to be? And will $2.5 trillion be enough to avoid some of the predictions that we've been seeing out there that the second quarter could see negative growth in the order of 20 to 30% stateside?
Well, I don't think the stimulus is going to really bear on that at all. I mean, frankly, we've seen projections for Q2, right? Whether it be 15% or 25%. I mean, that's going to be baked in. It really is, because people are going to be staying at home. They're going to be cutting their consumption expenditure. Businesses are going to be cutting their investment expenditure. The real question about the stimulus is whether, as I said, it's about cash flows. It's about everyone keeping the economy ticking over. Well, not so much ticking over. The economy still being in existence when we come out of this. So we will see dire Q2 growth. The question is, if the stimulus package is right and the Fed are willing to do all that it takes to lend to every business that needs cash flows, then we hope to see more of a V-shaped recovery, which means for the year, we're looking at a very nasty recession, maybe 2, 3, 4% year over year for 2020, but not worse than that. I mean, that's really the issue. We know what Q2 is going to look terrible. I mean, I don't know if it's minus 15 or minus 25%. I mean, at this point of the day, what do those numbers mean? It means large parts of the economy are shutting down. The key thing is we don't want these businesses to shut down permanently. We want them to have the cash so that they can come out of this and resume business.